I guarantee that the pairs you're trading are keeping you unprofitable. Whether you're new to trading or already deep into the game, understanding which pairs or assets best reflect macro forces is essential. So in this video, I wanted to break this into 3 steps. Beginners, the clean, simple, stable macro pairs. The intermediate traders are going to get some assets that respond more directly to risk sentiment and policy dynamics. And for the experts, the full macro suite, commodities, indices that move with the global cycle, and how to catch the bigger positions. To start, I want to go over 2 of my favorite currency pairs for new traders that I think you guys should be paying attention to when just starting out. That's going to be Euro USD and Euro GBP. These 2 pairs were my absolute favorite when I was just starting, and personally, these pairs are perfect for beginners because they're deeply tied to core economic data. Think interest rate differentials, inflation, growth expectations, but they're also highly liquid and less erratic than exotic currencies. To start, Euro USD gives you a direct read on US versus Euro policy. When the Fed tightens faster than the ECB, the dollar strengthens, and vice versa. It's a textbook way to study how monetary policy and economic divergence shape FX trends. As you can see, Euro USD is a very linear currency pair. When we're trending, we are trending in one direction. I'll even zoom out here so you guys can get the bigger picture here. We've been trading downwards from the better part of September into October. Then obviously from the start of October, now coming into mid-October, we are seeing some reversal of what it looks like of structure, and we're coming back to the upside. So coming to Euro USD, it is a solid pair to be trading when the trends are so trend heavy. You can clearly see the higher highs and the higher lows that are being printed here. And it's not something that should be very confusing here. As you can see, we are clearly trending in one direction here. And this makes catching moves on a pair like this very, very simple. The next pair, and probably my favorite pair to trade when I was a beginner, was actually the Euro versus the British pound. On the other hand, it introduces a more regional angle, tracking how the UK and the Euro economies interact. And it's influenced by relative growth, trade data, political shifts, but it still trades with enough stability for newer traders to handle comfortably. And I think this is so because of the low pip count that this ticker actually moves. In comparison to something like Euro USD, we're trading a fraction of the pips. So the Euro versus the British pound was one of my favorites because it is such a slow moving currency. As you can see, when there is structure breaks, they're following the same trends. But on a day-to-day basis, we're either ranging or we're actually making new highs or new lows. As you can see, we have consolidation right here, an immediate breakout to the downside. We have consolidation, breakout to the downside, consolidation, breakout to the downside. So really all you're paying attention to on something like Euro GBP is where the consolidation is, why it's consolidating, and which way it's going to break out next. So even going to something like the hour time frame, you can very clearly see the trends. Euro GBP does like to stay within what I like to say is an equilibrium. So you see price almost in like a sinusoidal form. And when it's trending, it's trending. When it's not, we're very consolidated in a tight area. It's just not a very fast moving pair. So as a beginner in macro trading, these pairs teach you the fundamentals of monetary policy, interest rate expectations, and interregional economics when looking at both of them. I think Euro USD is great because it is such a safe pair to trade. It is tied to the US economy versus obviously the Euro. But in comparison, the Euro versus the British pound is more on the other side of the pond, but it's just way more slower moving. So once you're comfortable trading some slower moving pairs, for the intermediate traders, I would recommend still Euro USD as your benchmark. I still think it is just such a clean pair to trade off of. But now I think it's time to broaden your exposure. So once you're comfortable reading this data and ready to broaden your exposure, the next pair I would recommend is going to be the Swiss franc versus the US dollar. The Swiss franc often strengthens during market stress, which investors de-risk or flee equities, and it's an excellent way to start watching risk sentiment, capital flows, and the flight to safety behavior dynamic. And as you can see, again, such a trending pair. When we are moving, we are moving. We're clearly bullish to the upside, and you can see how news affects this pair specifically. I'm on the 1 hour right now, but as you can tell, this is a very trending Forex pair that I do enjoy taking moves at. As you can see, I actually had an indicator set here, but personally, just one more FX pair as an intermediate that I would look at to find macro trends on, understand market structure on this. And when you're right big on a pair like this. Next is going to be copper. Copper moves beyond the currency list into real assets that reflect the global growth cycle. Copper is often called Dr. Copper because it's so closely tied to the industrial demand and economy expansion. When manufacturing PMIs rise, copper usually follows. And when the global demand slows, it's one of the first assets to feel it. Trading copper also allows you to connect more macro data to real world dynamic, and it broadens the understanding of cross asset correlations, how commodities and currencies and rates all tie in together. It's not as erratic as gold from what I find, and I still take trades on it to this day. Personally, the market structure is still very easy to read on this, but at the same time, it's a new commodity that you can trade that also broadens your risk exposure a little bit, but when you're right, you are right big. This is also, like I said, one of the first ways to tease and dip yourself into the global economy, because now you're not just paying attention to the US versus the euro. You're paying attention to all world dynamics and how it goes into one asset and how that affects that one commodity. And finally, for the experts, once you're operating at an expert level, this becomes less about reacting and more about positioning. So as a macro trader, now you're anticipating the policy shifts, the cycles that we're in, geopolitical changes across multiple asset classes. And now we're going to start looking at the big bad gold. Gold is the safest hedge against inflation. It is so reactive to everything. Trump tweets, this thing is moving like a meme coin. But positioning yourself properly in a commodity and asset like this, you can win big. Personally, this is one of my go-tos. Obviously, it is not for the faint heart. You have to be paying such close attention to the economy, what's going on in the world, why everything is going on in the world, and how this is going to affect gold. Gold is very good with market structure. Personally, I've never had a problem reading gold's market structure, but positioning an entry is the hardest part, and that's what comes with the expert level of trading. The next asset for experts is going to be oil. Oil moves with gold demand, supply constraints, and geopolitical risk. This can move off decisions or tensions or anything else that's going on in the market. Now, this commodity obviously is a little bit more interesting to trade, and it does take a minute to understand how to trade this. Personally, as you can see, from August all the way to September, we were pretty clearly in a range. We didn't really have any lower lows being made. We didn't have any higher highs being made. But if you can find how to trade that in between it, you can see it's very directional when it wants to be. Definitely something for the expert. I wouldn't recommend this as a new or even intermediate trader just because of how it behaves. And finally, the last pair for the experts is going to be indices. That's going to be the S&P 500, the NASDAQ, the Dow. These are crazy assets to trade. You have to have balls of steel to be trading in this. Indices reflect broader market sentiment and conditions, and they're very sensitive to policy and growth. Everything here is tied directly to the US economy, and you can see this was just the crash that we had last Friday. It is a very scary thing to trade if you are just starting out, and I would not recommend it. It follows market structure very well. Obviously, this is tied to the economy, so it naturally has more of a bullish sentiment. At the same time, the smallest thing can send this into like a very temporary crash. But at this stage, you're synthesizing everything: growth, inflation, policy, positioning. It's about connecting all the macro narratives with the market structure and then timing the cycle. Again, you're not reacting to it. You're anticipating, you're understanding why the market is moving, why it is having dumps like this, how it's recovering, why it's recovering. So again, indices are much more for the experts. I only started trading indices in my 5th year of trading. Before then, I wouldn't have even looked at it. So to summarize this, beginners start off with Euro USD and Euro GBP. Learn the core fundamentals of policy and divergence and understanding how these pairs are moving. Intermediates, stick with Euro USD, CHF USD, and copper if you want to expand your sentiment into real assets. And finally, for experts, oil, gold, indices, full macro expression through cross asset positioning. So obviously this is more tailored to macro trading, but this still goes for just if you are day trading, which I don't highly recommend, and swing trading, which I would recommend getting into first. In macro trading, it's not just about price, it's about the context, and understanding why something moves gives you the conviction to stay with a position when it matters the most. If you guys enjoyed this breakdown and want more macro focused trading content, hit the thumbs up button, subscribe, drop a comment on which asset you're watching right now, and maybe some more stuff that you'd like me to break down from a macro standpoint. Thanks for watching, and remember to stay data driven, stay patient, and trade the bigger picture.